is what cures all things, time and money. And that's what we have to look at, is what is the time frame? How long will this last? Well, in that last graph, you can see that most of the bear markets went on for close to 18 years. If we started this secular bear market in 2000, and now we're in 2009, the beginning of 2009, does that mean that we have another 10 years? Possibly. Doesn't mean that over the next 10 years that we only lose money in the markets, because you have to remember, we've already had a collapse in pricing. So typically what happens is we get a lot of policy change, lowering of interest rates. Fed comes out and does what we call quantitative easing. What that means is they turn on the printing press, and they start buying every asset they can to get the economy going. They're not going to quit. They're not going to take no as an answer. But you can only do so much. The whole reason our economy has bursted is because of a thing called derivatives, mortgage-backed securities. And you have to understand the depth of what was going on there. Back in 1990, there was about about $50 billion in mortgage derivatives. As of last year, it got up to $300 trillion. It's a huge number. We have a $14 trillion economy. So when you hear about $800 billion stimulus packages, $700 billion going to TARP, well, when you look at these mortgage-backed securities and derivatives that have caused a seizing in the credit markets, and you realize that there's $300 trillion placed there, and it's estimated that, and this is a fair estimate, this is like an optimistic estimate, is that a third of those are worthless. So you're talking $100 to $150 trillion that has been sucked out of not only just the US economy, the Chinese economy, European economies, you name it, because everybody was in the same game. Because we packaged these products and sold them all over the place. So will it take time for our markets to digest this? Absolutely. Do we need economic stimulus? Absolutely. Because you know what? Do we need the government to spend money? Absolutely. Because they're going to spend the money either way. Because when you get into one of these cycles, they're going to either spend the money through stimulus or they're going to spend the money through unemployment. The government's going to spend the money one way or the other. We'd rather have them being proactive in doing so. So can the problems be solved with the money that they're throwing out there? I don't believe so. And most of the experts that I talk to, guys from Goldman Sachs, guys who are managing directors for Wells Fargo, they all say the same thing. These are good first steps, but it's going to take some time. And so what you need to do as investors is figure out, what do you do to, one, protect yourself, and two, how do you prosper? Are there ways for you to make money? There are. Now, they have bear market funds out there that actually go up in value as the market goes down. They have mutual funds now that focus on currencies. So if you want to own the dollar and the dollar goes up, you can make money off of that. You can own a mutual fund that focuses on gold. You can own a mutual fund that is short gold, that makes money as gold goes down. There's a ton of investment ideas out there for people. You just have to know what's available, or the people that you work with, the advisors, have to know how to use them, know they're available, and know how to apply them within